Hello everyone, welcome back to MGF 1131. So in the previous video in section 8.1 we talked about introduced the percentage concept, and we use this concept to calculate the amount of tax we have to pay every time we buy in certain merchandise or product. Now in section 8.2 in this video, we continue with that concept percentage, and we're going to use it to calculate the income tax. And you know that when you're doing income tax, try to see how much you have to pay tax every year, and it depends on your salary, and it depends on a certain tax rate. Okay, if you're in a certain bracket, then you will see that there are different various tax rate you have to pay based on your salary. Okay, so in this video we're gonna learn how to do that. But before we go into the example, I'm gonna just introduce some formula and some terminology, and it help you to understand the question, because the question, it contains a lot of terminology, and it requires some reading comprehension skill. As long as you know what they talk and what they mean, then you use certain the correct formula, then you can calculate the income tax and the taxable income easily. Okay, so let's get started. So in section, okay, okay, 8.2, we're going to talk about income tax. Okay. Now the income tax amount can be calculated based on this formula. So I'm going to put the first formula here. Okay. The income tax is equal tax computation. Okay. You calculate the tax you have to pay, then you subtract the tax credit. Okay. So this tax computation over here is based on the taxable income. So based on taxable income and tax bracket. I already told you that we have different various tax rate, and each tax rate is corresponding to each bracket. So you need to see your salary what tax bracket it falls into. We're gonna do the problem, you understand. Now the tax credit. What is the tax credit? The tax credit is an earned income tax credit. Earned income tax credit. I don't know any of you. You guys work full time. Sure that at the end of the year you have to claim the tax. Okay, you have to do the tax return, and I'm sure you've been familiar with these terminologies. The earned income tax credit. They give it to you by the government, or the child tax credit. Okay, child tax credit is usually the child tax credit. Usually, this thing over here is given about $500. That's what they give it to you. Child tax credit. Let's say you have more kids. It means you have more credit. Okay, the government give you back more because you have to use money to support your child. For example, I have 2 kids, and at the end of the year they give me something, not a lot, but a couple hundred we find. Usually over here each child give us the 500. So I know some family, they have a lot of kids, and they don't work a lot, so they don't their salary is low, and at the end of the year, they receive tax credit like $2,000-3,000 because you have like 4 or 5 kids, but And sometimes I feel like it's strange because these people like they poor and they don't work a lot. They still have a lot of kids, and I mean that's the reason why they have more child tax credit. I mean, you see, the government it kind of is very fair in this case. You know, you have to support more kids, and I mean they give you back more money. You know, it's not a perfect system. I have to say so, but I mean, U.S. government, I think it's pretty fair on this case. Okay, it's very fair in this case. Okay, now the second formula is the taxable income. So you want to see how much income that is taxable, okay? And you can calculate it by the difference between adjustable gross income, not just gross income, but adjustable gross income, okay? And you subtract it by exemption, okay, and deduction. We're gonna go through each terminology here and see what it is. So we can calculate the adjustable gross income. Adjustable gross income. No, it's not just gross income, but adjustable gross income is the subtraction, is the difference between the gross income. See that? Gross income and the adjustment. And you're gonna ask me, okay, what is adjustment? What is adjustment over here? But first of all, I'm gonna go ahead and box it. I think this formula is important, so I'm gonna go ahead and box them. I mean, when you do the test, and you have to use it, you know. But this is an online class, so I'm still thinking about it whether or not we're gonna use the same format as we have in the homework, or we're gonna have some written question. Maybe we're gonna have both. Okay, maybe we're gonna have both. Maybe we have some multiple choice question, and we also have some calculation require you to write and show your work. All right, so gross income you already understand, so I'm not going to go through that. What gross income or whatever the company or any institution paying you every month, every whole year, for the whole year if you have salary. Now I want to mention adjustment. What is adjustment? Okay, this is very particular, special terminology. The adjustment we call it is a tax deferred investment. Some of you doesn't have adjustment, but if you have adjustment, then you have to do some subtraction. Tax deferred investment. So when you read the problem, they're gonna state it. They're gonna say, okay, the tax deferred investment is certain amount. Of course, then you have to do that subtraction. Okay. Now, then what is exemption? Let's say what's the exemption include? The exemption is a fixed amount for each dependent. Fixed amount for each dependent. If you have dependent, whether you have someone you claim as dependent, then that's what they give you. And usually that it is 3,800. Okay. And finally we have deduction. Oh, deduction. There's so many different items here we included in the deduction part. The first deduction we can say that is the home mortgage interest. Home mortgage interest, or it could be property tax. So if the question is stated any of this category, then you can include that in the deduction. So charity is also deduction. How much you pay, you give as charity. State income tax. State income tax is optional. Okay. Medical expense. Okay. And sometimes it's state income tax. This is option. Okay. Sometimes they give you that. Sometimes it's not. Okay. Depends on each person. All right. So we're going to use this three formula here in, to calculate the income tax. Okay. And the taxable income. Okay. Now we're going to jump to the first example right away. I have to say that this section, there's a lot of calculation. A lot of calculation. Example number 1. I require you to do it carefully. Now I need to pull up the problem. Let's see. Oh, where's that? What's wrong here? I cannot click it. Oh, here you go. Show the image here. Okay, so they have the tax bracket right here. You see that? You have a tax bracket, and you see that they have different rate, right? Different rate for each three category over here: a single, married, and household. Okay, and there are different rate for each bracket. Okay, and the question is, okay. All right, so over here, this is a question. Okay, and let's read it. The monthly have 100,023 the taxable income for year 2022. I'm going to be filing jointly. So jointly means that, you see that I underline that. So it means that we're going to go ahead and right over here. I'm going to put it in the red. Maybe in the red color, purple color. Okay. I mean, we're going to look at this bracket right here. Okay. And live in a state of 4.5% flat income tax rate. Okay. And determine their combined federal and state income tax liability. How much you have to pay tax. It's a combination between the federal and the state income tax. Okay, let's see how we do this. Answer. Answer. Okay. So you see that he make salary is $123,000. $123,000 would be this bracket right here, right? 22%. That is in this category, second category, and the third one. So it means that the tax rate we have to apply for this income will be 10, 12, and 22nd. So there's different portion that we have to apply the tax rate. All right. So during the for the first $20,000, okay, we're gonna do 10% tax rate. $20,000 of $20,550. Sorry, we're gonna apply 10% on that. So we will apply 10%. 10%. Okay, we already learned how to do this. And 20% of multiplication of 20,550. All right, so we're gonna go ahead and put into the calculator. 10%. It means 10 divided by 100. And you multiply by 20550. It gives you $2,000 and $2,055. Okay. Okay, I don't think my calculation is wrong. You can go ahead and help me check it again. And don't just copy it. I mean, we work on the problem together. I mean, you guys must have the calculator with you. Okay, then the second bracket is from 20,000 to 85. So you're gonna go ahead and take we're gonna go ahead and do subtraction. Okay, for because 28,000 to 83,000 and final value, you gotta do subtraction, and then give you the amount. Then we apply 12% rate on that amount. So 83,000 dollars, 50. You subtract by this. That's how you calculate. Okay. Okay. So 83,550 minus 2055. 550. I'm sorry. We subtract this to this. Okay, this to this, not this. Okay, because this bracket is start from 551. Okay, so we have to subtract this, so it must be in between this. So we subtract this to this, so that it include the part right over here. Okay, 550. Give you 63. Okay. All right, then we're gonna have the last bracket, but the high salary we have 123, so we get $123,000. You minus 178, 150. Oh, hold on, we minus what? No. We minus 83,550. I'm sorry, 83,550. Okay, not this. Okay, because this is including this part, so we're gonna subtract this. So which is give you put into the calculator, give you 123,83550, give you 39,450. Okay, so this is the amount of we had to apply the tax rate. So we're gonna have 10% of 10% of this we already calculated. So we're gonna apply 12% on this. Oh, I should apply 12% on this first. So 12% on 63,000. Okay, 12 divided by 100 times 63 give you 7,560. Okay, then we apply 22% on 39,450. You see that when you do the income tax, it's boring, right? I mean, there's a lot of calculation. That's why nowadays they use the calculator. They use the software, because we don't do software. I mean, you gotta do it like this. It's easy to get mistake. Divide by 100, you multiply by 39,450, give you 8679. All right, so that is for the federal income tax you had to pay. So you're gonna go ahead and add them up. So income tax. This is in federal income tax is 2,055 plus 7,560 plus 8679. Okay. 2055 plus 7560 plus 8679 give you 18,294. All right, so this is the federal one, but we have to do the 4.5% flat income tax rate. I mean the state one. Okay, the state one. This is the federal one. So now this the state one. income tax will be 4.7%, 0.0047. You multiply by the income. Okay. So you see that when I did the tax at the end of the year, I didn't even use this at all because we have the software. They calculate everything for us. You just go ahead and plug them in the number, and they calculate everything out in HR system. If you use the platform, then well, you know, I did not recall that we have to do this. I just plug it in. But you see, if you do manually, this is a very inconvenient and it's very easy to get wrong. We just give you this is give you $5,000, 781. All right, so the total tax will be 18,294 plus 5,781. And you add them up, it give you 24,075. There you go. Oh, okay. So that could be the answer. Because they're asking you the total. All right. Good. All right. Let's jump to the second question. Let's see. Example 2. Okay. Example 2 is more complicated. Let's see. I can go ahead and put it up. Okay. Oh no, not this one. Example 2. There you go. Okay. All right, let's do this, bro. Angelo earned wage $63,000, received 1,858 in interest from a savings account. So he made some money for a savings account, put the money in the bank maybe. Received 50,000 in winning. Oh, he win the lottery. Oh, the game show. Okay, so that's another amount of money he earned. And contribute 7,800 on the tax deferred 7. Here you go. Tax deferred. Okay, tax deferred 7. Tax deferred investment. That's the part we talk about up here. I hear that tax deferred. So that's the adjustment right there. He is entitled to standard deduction. Oh, I forgot to mention one thing. I just mentioned the deduction, but I never mentioned the standard. Yeah, so there are two different types of deduction. Okay, I forgot to mention over here. So let's just go ahead and add it. So deduction, there are two of different type deduction. For the standard and the itemized. Yeah. Itemized. Okay, so we gotta pick which one. Okay, we use for the deduction. Okay, and in order to know which one we're gonna use, this rule right here. I forgot to mention, so I guess I'm is there a way to go ahead and put it down a little bit here? See, I can go ahead and pull this down a little bit. Look, I'm stuck already. Yeah, I forgot to mention that. That's why. Usually, I can go ahead and snap a picture. I guess I have to use this. I'm gonna go ahead and delete it. Then I'm gonna try to move down a little bit. Okay, for the time being. I'll bring it back, but I try to move everything down. Let's see. I'm trying to move everything down so that I have enough space to add the rule. I forgot to add the rule. That's why. There you go. Okay, that's good. Okay, so put example 1 right here. All right. So the rule is, if the itemized deduction is greater than itemized deduction is greater than standard deduction, then we have to use itemized deduction. Okay, so this is very important rule I forgot to mention. Here you go. About some. So in the second example, because they mentioned the deduction, so we gotta see if it is itemized deduction or standard. Which one is better? I don't know. Let's go ahead and bring the problem here. Let's see. Okay. Oh, this standard deduction. Okay, so let's say we have any itemized deduction or not. Then the interest on his home mortgage is 6,500 over here. So here you go. There's some other deduction right here. And he paid $21, 2,100 property tax. Oh, okay. Property tax is also the part deduction. State tax. Okay, so state income tax. He pay and contribute to $3,000 in charity. Okay, so look like that we have a different category over here. We need to calculation to do that. So the question here is part A. The question is part A. We want to determine his gross income. Gross income. Okay, let's go ahead and do part A first. All right, so gross income is equal to, he has 63,500. Okay, plus another income from the saving account right here, 1850, and another income from winning. Okay, you put this into calculator, and I have to use calculator too, guys. 63,500 plus 1850 plus 15,000. Use the calculator with me, okay? Don't just go ahead and copy it. Try to get used to the calculator. 80,350. Okay, so that's the gross income. That's a gross income, but we need to calculate the adjustable gross income too. Okay, so we need to calculate the adjustable gross income, because in order to calculate the taxable income, we need to calculate everything. Gross income and adjustable gross income. So the adjustable gross income would be the income minus the adjustable, which is so you see right here, the adjustable part is right here, 78, and this is give you 72,550. Okay. All right. Now we're gonna go ahead and calculate the itemized deduction, because in order to calculate the taxable income, we need to calculate everything. You know, adjust the taxable income is adjustable gross income minus the exemption plus the deduction. Remember the formula? Taxable income, we already have it. Is taxable income is adjustable gross income. We already have it. Okay. Then we subtract by this exemption and deduction. So we need to see the calculate the deduction, and we already know that the standard deduction is 12,000. Okay, so we know standard deduction is $12,000. Okay. Now I already told you there are two different deductions. Itemized deduction and standard. So we gotta see which one we're gonna use. Okay. So we need to calculate the itemized deduction. Okay. So itemized deduction is the sum of the mortgage and property tax and state tax and the charity, and you add all of this up. Let's go ahead and add them up. Here, 65 plus 2100 plus 1855 plus 3000 will give you $13,000 and 455, right? I don't know if my calculation should be correct. Check that for me. All right. So you see over here the itemized deduction is this and standard is this. So itemized is greater. See, itemized deduction is greater than standard. It means what? It means we gotta use the itemized deduction. Okay. So right over here must be itemized deduction. It's not, we're not using standard. So we can calculate the taxable income is adjustable gross income. So taxable income will be adjustable gross income is $72,550. You subtract by the exemption and the deduction. All right, but we don't have exemption. Okay. Okay, you read the problem, we don't have exemption. So we subtract the deduction, which is the standard itemized deduction. Should be $13,000, 455. Okay, so 72,550 minus 13,455, which is 59,095. So that is the taxable income. Okay, so that is the amount of income the government tax you. Okay, good. Any question? All right, now let's jump to another example. Let me see. Let's see. Okay, I have another problem right here. Let's see, I can. Let's see, I can make it. Uh-oh. I don't know how I'm gonna switch it. I don't know. You can see my screen or not? Okay, I'm gonna put this as the. I don't have to copy. Okay. I don't know how to bring this picture to the other. You know, it's taking me a lot of time. So we're gonna just go ahead and look at this one. So this is example number 3. Okay. This is example number 3. Let me jump to the next page. Okay. So then example number 3, we also have the tax rate, the marginal tax rate is standard deduction. It's kind of the same amount as, it's kind of the same picture as the one we had before. Okay, it's the bracket. And over here, we want to calculate the federal income tax owned by the person filed return as a single. So we're going to use this. Who has the gross income adjustment deduction and the credit given below. Okay, so we have gross income is this, adjustable adjustment is this. We have some deduction right here. Okay, and we have some tax. We have a tax credit right here. So tax credit, we have income tax. We have the earned income credit right here, tax credit. Okay. All right. So again, we're gonna do the same thing. We're gonna calculate the adjustable income. We're gonna take the gross income you subtract by the adjustment. So that's what we have to do first. So we're gonna do adjustable income. Adjustable income will be the taxable, will be the gross income. Gross income is this 67,000 minus 9,000. Minus 9,000. 58,000. Okay, so that adjustable. Then we calculate the, so in this case, we gotta calculate the tax. Okay, so in the second example, we calculate the taxable income, but we did not calculate the tax yet. So example number 3 is a continue of example number 2, different tax bracket. Okay, we calculate taxable income, then after that we calculate the tax. So over here we have taxable income will be the adjustable income. You have to do subtract by the deduction. Okay, so we need to calculate the deduction. All right, so deduction, and you see that over here is did not mention standard deduction. So over here they just mentioned the itemized deduction. So we're gonna calculate the itemized deduction. In this case, the itemized deduction. So itemized. Okay, the itemized deduction is in the table right here. 7,500, 3,200, 5,454, 5,450, and let me see. And the medical expense not covered by insurance. Okay. So we're gonna go ahead and add them up. Okay. Okay, go ahead. Do the quick calculation right there. Okay, I'm gonna check one more thing. I just want to make sure everything is fine. Okay. Okay. There's some rule for medical expense, so I don't think we need that because I just go ahead and calculate the deduction by add all of this. Actually, there's some rule over here, but I consider this because it's medical expense. I consider as a itemized deduction, so I'm gonna go ahead and add all of them. Okay. The textbook, when they do this problem, they exclude it. They don't want to include the medical expense because they say that we can only deduct if it exceeds 7.5%. But I think that I'm not gonna put it into consideration here because we're not really doing the tax right now. Well, this is the problem for you to understand how we do the tax. Okay, so we're not doing the tax. I mean, in this case, I'm just go ahead and include everything. So I'm gonna go ahead and include that one too. So itemized will be 7,500 plus 3,200 plus 5,450 and plus I include them. Okay, so we just add them up, give you 75 plus 3200 plus 5450 plus 1500, give you 17,650. Okay. All right. So we have the finally we have a taxable income will be $58,000 minus 17,650. Okay. So you see that if we don't include 1,500 over here, it means that this is a smaller number. Smaller than when you subtract a smaller number, which is the amount of income you the government tax will be much more. It means you gotta pay more, but because we included, so the person would be paying less. Okay. Because it's a bigger number, so it means the taxable income will be small. Taxable income will be small. It means the tax will be small. Okay. Okay. So 58,000 minus 17,650 give you $40,350. So that's this amount of tax. The amount of money the government tax you. Now we gotta go back to the bracket and see how much you have to pay for the tax. So we know that we are at 40,350. Okay, and he filed single 43,000. So this look like this bracket right here. So single. So we're gonna do 10% of this, 12% of the subtraction between this and this, and 22% the subtraction between the income, the taxable income and this one. Okay, let's do it. So the tax amount will be 10% of 9950. 10% of 9950 plus 12%, midpoint 12 of what? 4525 minus 9950. 4525 minus 9950. Okay, plus 22% of 40. Oh, hold on. The tax will be only 40. I'm sorry. So we have only two brackets. We need to. Yeah, only two brackets we need to do. Oh, I'm sorry. So okay, so we don't need this. Only two brackets. So we're gonna take 43. 43. I'm sorry. Because we have only two brackets. 4350 minus that. Okay. All right. Let's go ahead and calculate it. So 0.1 times 9950. This is $995. 40,350 minus 9950 times by 0.12. $3,000 648. So the tax amount you had to pay back to the government will be, add them up, 995, $4,000, 643. So you see that. So you see that if you make $67,000, you see over here the tax rate that you have to pay back at the end of the year. You got the tax amount that you got to pay is $4,643. That's a lot of money, right? I mean, that's why I said that every time I pay the tax, I would look at the amount of pay, like, wow, this amount of money I can help a lot of people, but the government take from me, they probably, well, I mean, it makes sense because think about it, you had to, I don't know, some of you love the way it is. I've been in US for like 23, 24 years already, and I had to say that we do a lot of tax. We have to pay back a lot of tax. So if you think about it, if you poor, you have more advantage because you pay less. But think about it, you really make a lot of money, like $1 million at the end of the years. Think about it, you have to pay a lot of tax. When you think that, okay, you think that you pay a lot already, but a lot of people pay more. I know a guy, and he's a part of my family. He's American, and he married my little sister, and they pay a lot of money as a tax at the end of the year, and sometimes it's like, wow, really? You pay that much back to the government, and that's why I say many people kind of ask, okay, what the government is used the tax and money for? So they keep asking the other question, and that's why a lot of people complain. Okay, U.S. government is used that for war, and maybe used for the other country, to help other people instead of helping American people. And we don't want to talk about politics, but a lot of questions ask that type of question. Where to get the money, where to spend those money. Sometimes we have to think about that too. But just for you to know that, you see that as we understand how to go, so it's gonna help us really understand what our situation is, and what question we need to bring up, okay, to improve the country better. Okay. All right. So I think 3 examples is good enough. So the first example, you see that we're gonna learn how to calculate the tax. Okay. Then the second example, we learn how to calculate the taxable income, and finally we learn how to calculate the tax amount. So we have to pay if we have different category, different items, we need to include or exclude. Okay. All right. So that's all for section 8.2. Then I'll be seeing you next time on section 8.3. All right. Bye bye.